What up, everybody? It's your boy CG back at you guys again with some more cryptocurrency news and information. Now, before I get into today's articles and/or information, I'd like all of you to do me a favor and hit that like button below. The like button brings more awareness to the channel. It's the easiest way to show support, and it takes less than a second. And I would really appreciate it because Google has been on basically the attack. They haven't been allowing me to properly advertise my videos on the network. They keep labeling it as cryptocurrency, saying I'm passing investment information or something, even though I'm really just talking about news that's going on in the industry and in the space. I'm not passing investment advice, but hey, like I said, if you guys could do me a favor, hit that like button. It's their platform. I'm not going to tell them what to do and what not to do. But yeah, so getting into today's topics, Bitcoin is hovering around, like I stated, and I'm gonna keep saying that because it's true. We're stating around the 6,500 to $7,000 range, and when I say $7,000 range, I mean like even the little overages, like the 72, 73, even a little below 6,500, 62, 64. Like I really just kind of give that, but anything within really, I mean the $6,000 to $8,000 range. Maybe I should just say that instead, but we're seeing a lot of upward pressure. The stock market is starting to recover, so a lot of people are suspecting that we're having positive buying pressure from people trying to resecure their positions back in the cryptocurrency space. They're supposedly supposed to be taking away the mandatory lockdowns, and it's going to be at the discretion of each individual state, well, in America anyway, to reopen their state and the cities. But in today's first article, actually something we were talking about the other day. Circle CEO claims explosive stablecoin demand from everyday businesses. Now, to make a long story short, if everybody doesn't know, Circle is the company or entity behind USDC, the stablecoin that's used on Coinbase. They actually partner with Coinbase, and since then they've seen an explosive amount of growth in the demand for their stablecoin all across the board. So over the past several weeks, we have seen explosive interest and growth in USDC, he said, referring to stablecoin Circle issues in partnership with Coinbase. There is clearly very significant global demand for digital dollars and the use of digital dollars as a new payment medium. Now, albeit this may not be actual exposure to the more volatile cryptos like BTC and other altcoins, whatever it may be that you're looking at, this is still a sign of the times to come. The fact that people are now starting to realize the weakness in the current system, and not just big institutions, but the small businesses, the smaller companies, the medium-sized companies, they understand. New signups that come from e-commerce marketplaces, advertising networks, luxury goods producers, recruiting platforms, digital content markets, peer-to-peer lending platforms, payment companies, software firms, professional services firms, reward businesses, mobile banking providers, and other companies. That's crazy. Like, we are getting feedback from Asian market participants that there is more and more demand for USDC from SMEs, which is like an acronym or short for small and medium-sized enterprises, seeking both the safety and utility of digital dollars. The company saw the number of Circle business accounts introduced last month for corporate clients to conduct business using the stablecoin grow 700% over the past few weeks, with more than 2/3 of these businesses coming from outside of the crypto space. That's insane. And then they're saying right here the amount of supply that USDC has grown in the past couple months. They stated right here, supply has grown from around 444 million on March 1st to $734 million to this date. That's insane. Alir's explanation for the surge suggests the crisis is accelerating mainstream adoption of blockchain technology. And it's very true. I was saying this in some other videos. We had other articles with a lot more reputable people than me saying the same thing, that we are seeing the transition into, we were already kind of in a digital age, to a certain extent, but it wasn't, people weren't really, how can I put this, it wasn't like a big social awareness about it. You know what I mean? Like it was just kind of a everyday thing. Oh, this is a new something new we could do. But now it's kind of becoming like a big demand for moving into the blockchain space. Like people are actually seeing the benefit in cryptocurrencies, altcoins, stable coins, whatever you want to call it, still all falls under the umbrella of cryptocurrencies. And it's crazy to see that these huge purchases or these huge spikes in demand are coming right after the coronavirus has basically devastated economies all across the world. So everybody's basically looking for dollar substitutes. They kind of go on to talk about the other stable coins and their growth. Binance having the most growth, up over 194%, which is freaking sick. It's crazy, man. But yeah, I was saying that stable coins are going to start flourishing. We're going to see a lot of growth in this area. And this growth in this area, I believe, in my personal view, is going to be directly tied to the rest of the crypto space because these stable coins are entries or pathways or gateways into the wormhole that is cryptocurrency. Next article, Bitcoin halving and what miners are looking to expect from it. So Miss Sun, I believe her name was Sun, Sierra Sun, yeah, the head of global business and markets at cryptocurrency exchange Huobi. She has a little, I guess, podcast right here where she speaks on this topic. Is saying that her perspective of what's going to happen post halving is that we're going to see some volatility, but everything as far as profit margin for miners is going to slowly but surely return to the levels that they were previously. And to be honest with you, mining once the halving happens, miners they're going to be producing less BTC, and the fact that they're going to be producing less BTC also puts pressure on them because if BTC is trading at the same prices that it was trading at pre halving, then they're going to start feeling a lot of the pains that come with waiting for the price to go up. And in my personal opinion, we are going to see the steady rise in price, even though there may be some volatility and downturns post halving. We are going to see an increase because the miners are the backbone of the industry. They're one of the largest mining industry, no, one of the largest Bitcoin mining projects or companies or whatever you want to call it is being built in Texas. Why would all of these major corporations, whatever you want to say, these billionaires get into Bitcoin mining if they were just going to suffer from not you understand what I'm saying? They were going to suffer. Why would they get into something where they're going to suffer and lose money? They're clearly doing it because they expect it to be extremely profitable for them in the long term. So Bitcoin miners, while they may have some short-term growing, like some short-term pains, I believe that they are still going to remain profitable and be even more profitable than they once were. But yeah, moving on to the next article, crypto scams on the rise and can still affect Bitcoin prices. So that goes to show you sometimes you're going to get articles where they speak on projects and scams and so on and so forth, and they're going to have opposing views, and you're going to have different data sets that tell you something different. I actually did an article the other day where I was talking about we're not seeing as much, but I still did admit that there are projects around that, well, fake projects or scam projects that are out still trying to take people's money. They're there. But yeah, amid the coronavirus, people are taking advantage of this time of panic by giving people by making fake promises to people about about making generating some type of revenue with high interest rates or relief funds. They actually have a list right here from malware to fake investment programs and even fake donations to health organizations. Scammers are known for taking advantage of desperate times and desperate people. So guys, if you're listening to this, you guys should really take heed. Always triple check. I'm not even gonna say double check. Triple check the person or the program or company that you're going to be using for whatever means, whatever it may be. Does it make sense? You guys have to really consider these things. Does their program make sense? Are they backed by the official company that you're actually trying to support? If it's in the form of like donations for a health organization, you should contact that health organization and see if they're actually tied to it. These scammers are ruthless. They don't care. They will take your money. This is crypto, and you're not going to get it back. It's not the real world where it's the bank where you can just call the bank and get a credit back to your account after after telling them that fraud was committed on you. So it's something that a lot of people have to take in mind and consider, especially when they're walking through these. I literally want to call them death traps because a lot of people can lose like their life savings that they've saved up. I've heard people losing their life savings in 2017 when, well, 2000 end of 2017, beginning of 2018, when BTC shot all the way up to 20K. A lot of people were, I guess, refinancing their houses, taking out loans, all these other things, and a lot of people got burned really bad. So the fact that people are desperate for the real thing, which is BTC, they will be just as desperate for things that come under the guise of promises that may far exceed the potential of BTC. So a lot of people have to be careful, look out for these types of scams, and just stay vigilant. Next article. So essentially, we're just talking right here about how China's central bank, or CBDC, is launching their own CBDC. CBDC. Okay. Well, yeah, they're launching their own digital currency. It's going to be tied to the state. They actually had a leak recently where people saw basically like a prototype of this platform. People thought it was a rumor, but it turns out it wasn't. It was actually released, well, confirmed to not be fake by I guess a big time media company, and also this media company is tied to an entity that resides or presides over around 10 million people. They're supposed to start going through integrating people into the system in a little bit. People are going to be demanded to, well, not well, it's China, yeah, so demanded wouldn't even be far off. So people are going to have to download this app that's going to tie them to this new CBDC system. And beyond that, when they actually started talking about the venture capital firms that are looking for exposure in the cryptocurrency space. And it's crazy once you actually start seeing the actual numbers. It's one thing to hear it and hear that, oh, Grayscale is getting into crypto or Fidelity is getting into crypto. And it's another thing to see the money behind it. So right here, for example, top venture capital firm wants more crypto exposure, according to Financial Times report published April 14th that cited. Two people briefed on the matter noted venture capital firm Andreessen Horowitz is looking to raise $450 million for its second crypto and blockchain investment fund. Horowitz first waded into the crypto space with an investment in Coinbase, then doubled down on his support for BTC with a $350 million raise in 2018 to invest in projects like Dfinity and ventures working on digital currencies, like Libra, for instance. It has also made direct purchases of cryptos. Grayscale. Institutions are betting big on crypto, namely BTC and ETH. A report from crypto fund provider Grayscale Investments released this week confirmed that there remain institutional players that continue to demand crypto assets. The report indicated that during the first quarter of 2020, the firm brought in $503.7 million, with most of the capital allocated in Grayscale's two flagship crypto funds, the BTC and ETH Trusts, which trade on public OTC markets under GBTC and ETH acronyms, respectively, or cash tags, I guess, whatever you want to call them, respectively. 503 million is double what the firm raised last quarter, Q4 of 2019. Ugh. Now, for the final one, Libra. Libra actually is backing away from their world digital currency idea, and now they're refocusing their attention into stablecoins, which actually is extremely smart. Why make yourself susceptible to attack when you can just put all the money that you have and back these other things? So that's actually a smarter way of going about what they intended to do in the first place. The Libra Association is planning to change its original plan from a central stablecoin to offering multiple stablecoins backed by one nation's currency, alongside its multi-currency stablecoins. Libra board member David Marcus, head of Calibra at Facebook, updated the world further by explaining that the association is hard at work on a sanction and anti-money laundering mechanism and a market-driven governance model. So yeah, a lot of big players are looking at the crypto space, whatever area it may be, alts, BTC, stable coins, just DeFi apps. And it doesn't have to necessarily be a company with their own cryptocurrency or a cryptocurrency. Like, the space is growing at an alarming rate. Final article: the US SEC allows $10 billion hedge fund to offer access to CME Bitcoin futures. So essentially, this is about a company named Medallion, and they're basically gotten the green light to start investing or putting money behind BTC futures by the CME. And if you guys don't know, futures are essentially when people bet long or short on the market. So they're playing a gambling game where they're betting, is the market going to go up and is the market going to go down? And they can put their money behind it and they can win big if the market goes up, which is called longing the market, and they can win big as well if they plan on the market going down by shorting the market. And they use things such as leverage and so on and so forth. But this isn't a lesson about futures trading, or even, would you say, margin trading too as well, because margin trading is kind of similar. But the point is, they're getting into it. It's not going to be the actual BTC settled futures that Backed is doing. They're going to be the traditional paper format of futures that the CME does, which is still, I don't want to say it's bullish really for BTC, because that paper, the paper system, it's stupid. Why not just bet in actual BTC? But hey, at the end of the day, they're going to do what they do. It's not going to slow the roll or stop the steam of the whole industry growing. It's just kind of still surprising to see that people are still going for the paper route. But that doesn't necessarily mean that they're not investing into other forms of the asset. You know what I mean? Like, there's Backed is still there. Backed does physically settled BTC futures, well, settled in BTC futures. It's There's just so much that we don't see that's going on that probably will blow our minds if we really comprehended the full picture. But that's it for today, guys. I'm a little bit in between work right now. This has been your boy CG. Peace. I'm out.